Alrighty boys, so as the title of this video says, I made 2.8R this week and I'm going to be making a recap video on basically the trades that I took. This is the first time that I'm sharing my trading journal with you, and I do believe that it is going to blow some of your minds. I have spent so much time on this journal, literally like 6 months to make it as perfect as it is right now. We're going to jump into all of the databases behind it, but yeah, let's just dive straight into the trading week first. So this week I took a total of 4 positions, 3 trade ideas, but 4 positions. And let me just make this screen bigger for you right now. Okay, so you can see everything right now. So I took four positions, three trade ideas. 2 trade ideas were on the same position. And then there was basically a position on Monday, 2 positions on Tuesdays, and then 1 position on Thursday. Monday was the biggest position. This was a trade that I had planned and that I sent in the Discord group, link in the bio, totally free. I don't make money from this. All I'm trying to do is to get like-minded traders in the server. So in my server, we focus on data, and I'm about to show you data right after what data really is. Let me just show you now because this is very exciting. This is what I mean by data, okay? This is a total flex for me. And this is what trading influencers should be flexing on, okay? I have 208 trades journaled here, and it is the most complete journal you will ever see. And this is what I recommend. This is a journal as well that I have purely for my mental state. But anyway, I just got totally distracted. Let me zoom back in. Let's filter it to this last week. This week. Okay. So 2.8R. Let's jump straight into the first position. This position was sent in my weekly basically breakdown of what was going to happen. And let's just make it in big right here so that you guys can see it. So I entitle the trade idea Magic Man Method 12 because the 12 trade that I'm taking within this method. It's a phase A trade. I use photon concepts. Bank 2.7R, and let's just dive straight into it. So the trade was taking at 3 a.m. New York time, and let's just go straight to the images. I'll go over the analysis later. So this is why I entered the trade. If you look back to your Monday chart, what I was seeing personally was we had Friday's CPI's high. We had the previous daily high as well. We had this liquidity point, which had mitigated my flip zone. Order flow was bullish. We had equal highs on top, equal lows below. This was textbook AMD. So this is the top of the accumulation, CPI high. This is the low of the accumulation. The low of the accumulation gets swept within the London kill zone and the London silver bullet, if that's what you want to call it, at 3 a.m. We get a 15-minute strong reversal candle, very strong reversal candle, remitigating this flip zone that I had right here. So these are supply and demand concepts. I enter the trade, price pushes to the upside very nicely, and then let's just look at the end result. Yeah, so this is the end result, targeting the CPI high. Fun fact about this trade, because I am in Sydney, I had to wake up and close this trade position. So my take profit got hit around midnight. I had alerts blasting as I was sleeping to close the trade. And I actually ended up closing it just below because I was literally sleeping as the target got hit. So that was a good lesson on my part. And this is basically the whole process that I go through while I'm journaling a trade. So this is getting a bit more technical here, but I have the playbooks. So these are the playbooks that I trade. These 2 are basically the main playbooks. The rest is just playbooks that I have from my journal previously. I have my high time frame bias. So am I trading in line with the daily expansion? Am I trading the daily pullback? Am I pro high time frame, counter high time frame? These are just properties that I can apply to the trade in order for me to be able to filter in my database later on. So I can filter based off of the confluences, which we'll go over soon, which are right here. I can basically filter the confluences and see which zones are working better or not, okay? I can see which day of the week is performing the best by clicking on this, and then I have all of the Tuesday trades, blah, 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 blah. Okay, but let's just dive into this. Sorry, I'm getting distracted. So, high time frame pricing. So the high time frame pricing for me is regardless to the is relevant to the 4-hour time frame. So again, trading 4-hour expansion phase. Are we at the high or low? Am I taking a long? Blah 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 blah. This is the first part of my strategy. Looking at the higher time frames. I want to understand where the higher time frames are going. And all I'm trying to do is catch the higher time frame direction with a smaller stop loss, okay? To unlock higher risk to reward trades. Smaller stop loss doesn't mean 2 pips, doesn't mean 1 pip, doesn't mean I'm on the 15-second chart. I'll execute on the 15-minute chart and target daily dolls. Okay, hope that was clear. So these are the confluences for this trade. It was a zone that created an internal break of structure. It was pre-mitigated. It was an old zone. It was a flip zone, a chain zone. It had available PBID, which is basically pullback inducement liquidity. These are all Photon concepts. Go look at Photon's YouTube channel. They have a great YouTube channel. How did price sweep the low? So for me, it basically, the NC plus S means no close plus sweep. Swept the low. It was counter 15-minute order flow, and I had longs below the midnight open. Midnight open, massive thing, massive indicator that I use as well, where we are relative to the midnight open when I'm taking a position. As day traders, we're trying to catch the daily candles move. And so if I'm taking a short below the midnight open, it's lower probability than if I'm taking a short above the midnight open, because above the midnight open, we would be hypothetically creating the top wick of that daily candle, okay? I also utilize the daily opening point on the candle. So the midnight open is not the same as the 5 p.m. open of the daily candle. So I look at these two openings to basically determine if we're in premium and discount relative to how the day could be, okay? Asset, Euro USD, phase A, again, Photon. Probability, this is a high probability trade in my opinion. Even though it is Monday, everything aligned perfectly in my high probability textbook setup. It was a no news day. Now, regarding no news days, depending on what you trade and how you trade, there might be high probability or low probability. For me, a no news day is high probability. I want to be trading when there is no news. I've consistently seen that my edge works when there is no news. You can agree with that. You can disagree with that. I don't give a shit. This is based off of my data, okay? Finally, the trade was counter market structure. So this should be called counter head and shoulders, because I like taking a trade where I know that there are participants taking a short. So if I'm taking a long, I want to see how participants could be shorting right now. So this basically means combining retail concepts. So when price broke this low, you probably had traders that were seeing a range breakout. So obviously you have the highs up here, the lows down here. We finally are breaking out of the lows. Maybe on the 1 minute, we broke that low and they're entering shorts, etc. Stop losses above these highs. For me, this is a great indication to go long. And so this is just something that I'm constantly tracking, which is there an argument for why people are going in the opposite direction as me right now? And that makes a trade higher probability if I can see why people would be shorting if I'm longing, okay? These are retail concepts, why retail would be shorting right now while I'm longing. Finally, entry candle size. This is really helpful in order for me to, by the way, I'm going to go over the trades that I'm taking, but first I'm just explaining how I analyze a trade, and then we'll just go over the trades, right? So entry candle size, very important for me to understand what the size of the candle is when I'm entering. Then I can track in the future. So if I'm entering on a candle that has a 20 pip stop loss, maybe my data will say that that's lower probability or high probability, etc. What I've currently found is my high probability entry candle size is between 4 pips and about 6 pips. So I usually have a 2 pip buffer as well. So I'll have a 4 pip stop loss with 2 pips of a buffer, which makes a 6 pip stop loss, okay? Maximum risk to reward. So this is the maximum risk to reward that trade went to in whatever amount of time. So if I'm banking, which I did 2.7R on this trade, but the maximum risk to reward for that trade was 5.4R, I'm losing another 3R. and another 3.3R. And that's just good to track, because in the future, once I understand why there are certain, in the future with this data, which was how far certain trades run, I'm going to be able to hold the trades longer. And then finally the month, October, etc., 2025. And then if price retested my entry, very, very good metric that I track, because most of my winning trades will never retest my entry, which means that literally 5 minutes post execution on a winning trade, I can go break even. Obviously, I can't anticipate if it's going to be a winning trade, but what's good to know is for those textbook setup, it's never going to retest my entry. So my analysis, we're in phase A territory and have essentially liquidity at the zone I'm looking to long from. It's in line with my high time frame bias. This is not what I have written down, but I'm adding information to this analysis. The trade is in line with my high time frame bias. We have a 3 a.m. entry, post manipulation and displacement. So if we look back to the chart right here, 3 a.m. entry, swept liquidity, bullish high time frame bias, AMD, sweep of the lows, equal highs that are resting. We get the displacement on the 15-minute candle. I enter with a buffer, and then that's it. That's the trade idea. It's a really, really basic trade idea from my high probability demand zone. And I am going to show you now what other timeframes were looking like. So this is the 1 hour time frame. 1 hour time frame was looking clean. Swept the liquidity. We were in this fair value gap. Sorry, guys. Fair value gap was holding. The previous 1 hour candle was very, very bearish. So this is inducement of shorts. This is where sellers are stepping into the market. They think we're going to go down, etc. But the reason why I'm not getting trapped is because I understand the higher time frame narrative. And what I'm going to do to show you that I understood the higher time frame narrative was, for me, we were at premium prices within this range right here. Discount prices, sorry. So we had mitigated discount. We had closed the daily gap, so the daily gap was open, swept liquidity, everything was in line to now create that higher high. And I'll show you my analysis from the daily time frame. I was basically anticipating for this to happen throughout the following weeks, etc. This is not what happened. Price ended up pushing down, but we did get a first initial reaction up into basically consequent encroachment of this rejection block up into here, and then we've pushed down lower. But so this trade obviously played out, right? And this is proof of execution right here. So this is the buy. I'm on the 30-minute time frame here on MetaTrader 5, but this was the buy. This is where I closed the first part of it. This is where I closed like 80% of the position. I was, basically late to close. And then this is where I closed the remaining 10 to 20% of the position the following day. And as you can see, there are a couple of stop losses here, which leads me into the following trade. Well, but first, let me just explain the lessons that I learned. These are from today. So the lessons that I learned essentially from this trade, which I have entered here, I could have set multiple alerts before my take profit. So because it's late at night for me, I have to set multiple alerts before my take profit so that I'm fully awake once my take profit gets hit, because I'm doing partials as well. Trade review, the trade played out because we were in phase A territory, price swept PBID, so liquidity in the pullback, and then reversed with strength. That is trade 1. And I'm going to quickly go over trade 2. Obviously, I'm not expecting everyone to watch these these videos entirely, because they're very detailed, but I'm making all of these videos because I want to show to you guys that this is actually what's happening in my trading. I want to build credibility, okay? So trade 2, now that you understand the way that I track it, we don't have to go over all of this. In my Discord, I do send screenshots of the whole thing if you want to review it as well. Trade 2, this was more of an aggressive trade. So what we had is we mitigated a medium probability demand zone right here. This is Euro USD again. This was a chain zone, so price reacted to this overall demand zone right here. We had liquidity in front of it. We had a clear reaction of a sweep of this This is where the 4-hour candle had opened up here. Midnight open was above it. This is still a clean trade. The only thing that I didn't like about it was we were in 4-hour high territory. So that was the low probability part of this trade. And this is why I should have risked less than my 1% risk. So I should have risked like 0.5 or something. This is how the trade played out. So we got volume pushing into my direction. I noticed this potential zone that could push price lower. Price mitigates it and then push lower. And so I got stopped out. I moved my buffer just to this low after price mitigated this because I could see the volume kicking down strongly bearish. So that was trade 2. So there were 2 positions. This is basically the exact same trade, but I re-entered it right after price re-mitigated the rejection block. This was a mistake on my part to re-enter it. And so the total loss on that was, 1.2R approximately. 1.34R or something. And then finally, the last trade of the week, which netted me 1.44R, was GU shorts. So the way that I was viewing the chart coming into the day was we had retail. You guys can't see this. Hang on. You had retail that was extremely bullish. I just used the FX sentiment tool. So retail was extremely bullish, which gave me reason to be bearish. Retail is consistently unprofitable, as you know. So in my opinion, it's valid to go against what retail traders are doing. We had this flip zone right here. So this clear, let me zoom in. We had this, there we go. This clear flip zone. So what price did here is it formed SMTs at the high with Euro USD. So this is pound USD right now that I'm analyzing. It formed SMTs at the high, swept liquidity, reacted to this zone, this demand zone right here. So right here, you see the reaction. The reaction fails to push price above this high. So we push up higher, mitigate the demand zone, slowly start pushing higher, fail. So demand fails, supply gains control. You get 2 consecutive bearish candles, you get another bearish candle, and then this was my overall high probability zone. Price did mitigate it just before the London session, but I was viewing this as liquidity. Price came back in the London session, swept it with strength, and let's just drop down to the 5-minute so that you can see exactly what I was seeing. This was a pretty easy trade. Price comes up into this zone, there's a liquidity above it, boom. We get strong bearish displacement, and that's where I enter. I enter post-candle closure, strong bearish displacement, clear reaction to the liquidity and the zone, which was high probability. This zone was also reacting to this overall zone right here. Price pushes down, gets to Asia range low. I end up closing a majority of the partials here and then get stopped out here. So I closed like 80% down here and then get stopped out with the break even here. And yeah, that was a very clean trade. The main thing that I want to talk about on this trade is like my main sort of mistake was price ended up running to this low, which was the week low and my weekly target. So had I been very ballsy, I could have held all the way down to this, obviously close 80%, not have a break-even position and have my stop loss at this high. And my 2.8R week, which you can see right here, would have turned into a 9R week. So that is the recap. Tell me if you guys have any questions on the trades that I took, on the journal, etc. It is not for sale for now. You can get inspired by this to create your own journal. I basically created this journal because I didn't want to pay for TradeZella. I now pay for TradeZella because it's a banging website. And let me just see if I can show you guys my TradeZella. Bear with me. I know your attention span is leaving. Okay, hang on. Okay, this is going to be a great way to end the video. So I'm not going to show you guys any P&L, but I've basically created this account right now where I am risking 10% per trade, call it risky, etc. Blah, 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 blah. It's an insignificant amount to me. And so these are literally the trades that I've just explained. So I'm up 28% on the week. Monday was a 25% trade, and then Tuesday was a 1.44 R trade, which is exactly what you can see here. And then, sorry, Thursday was that, and then Tuesday I lost 10%, so 1 R. And this is my profit factor currently, which is really neat. This is the only sample size that I have, so it's a very small sample size, but I'm loving seeing all of these metrics as well as the metrics that I have with my Notion. And that is it, boys. This is a trading recap video for week 4 of October. See you in the next one, which is going to be posted next week. Peace.